What is up, you guys? My name is Aubrey and this is my channel, and today I thought I would take you guys through my $14,000 investment portfolio. A couple of months ago, right before this market crash happened, or right around the time that it happened, I made a very similar video to this titled Revealing My $7,000 Stock Investment Portfolio. And today I wanted to do a bit of a follow-up to that because since then I've been adding a lot to the investment portfolio. I've also been buying and selling and have made some really good trades over the last couple of months, resulting in the portfolio being worth just over $14,000 as I record this today. So I'll take you guys through the investments, what my shares are, what the results of those shares are, and what my thought process was when buying these stocks. So let's get started. Now, I want to preface this video by saying two things. The first thing is that keep in mind I am not a financial advisor, and this video is not giving financial advice. It is purely just telling you guys where I put my money over the last couple of months, and you can do what you want with that information. The other thing that I want you to keep in mind is that my investment strategy has been quite a bit different over the last few months, given the current economic climate and the market crash. If things were normal and everything was fine, the way that I would be investing my money would be quite a bit different. And always remember that whenever you're investing in the stock market, do not invest more than you can afford to lose, and do not put your life savings in the market. So with that being said, let's dig into my investments. Now, when making my stock picks for this market crash, there were a couple of things that I wanted to keep in mind and that I held as standards for all of the investments that I made. One was that I wanted the investment to be in a company or in an industry that I didn't see going away anytime soon. So things like the oil and gas industry, the entertainment industry, or the travel industry were all industries that I looked at quite heavily for investments. The other thing is that I wanted the investments that I made to have a potential of making a 300% return over the course of the next couple of years. All of the investments are investments that I plan on buying and holding for as long as it takes for it to get the return that I'm looking for, and I'm not looking for a short-term play. So because of that, I wanted to find stocks that sunk quite heavily at the beginning of this market crash, and because of that, they have the opportunity to go up either 200 to 300% over the next few years. So with that being said, one of the biggest positions that I hold is in an ETF called GUSH, that's G-U-S-H. And GUSH makes up 52% of my entire portfolio, and it is valued at $7,792.20, and as I sit here today, it has made a 56% ROI. I bought GUSH at an average purchase price of $27.05, and as I sit here today, it is valued at $42.12. Now, GUSH is an oil and gas ETF, and I chose GUSH because, one, I like the fact that it was in the oil and gas industry, and I purchased this stock right at the heat of quarantine, and so as a result, gas prices and oil prices had tanked, and as a result of that, oil and gas stocks ended up tanking, and GUSH was absolutely a victim of that as well. The other reason why I like GUSH is because it is an ETF, meaning that it is a reflection of the oil and gas industry as a whole, rather than just a specific oil and gas company. Now, that was something that was important for me because I don't know a whole lot about the oil and gas industry, and I didn't know a specific company that I wanted to invest in. So choosing an ETF that is a reflection of the oil and gas industry, rather than a specific oil and gas company, was something that I found really attractive to the stock GUSH. My second largest position in my investment portfolio is AAL, and that is American Airlines. And American Airlines makes up 12% of my entire portfolio. It is valued at $1,682.80, and as of today, it has made a 15% ROI. I purchased American Airlines at an average purchase price of $10.48, and as I sit here today, it is valued at $12.02. Now, I don't expect for American Airlines to recover anytime soon. This is definitely a stock that I could see myself holding for over a year if I need to. But eventually, the world will return to normal, and travel demands will return to pre-COVID numbers. And with that, the American Airlines stock will go up in the process. And that was my thought process when investing in American Airlines. Whenever I made this video the last time with my $7,000 stock portfolio, I had also had investments in Delta, and I actually ended up selling Delta a few weeks ago because I felt like having shares in both Delta and American Airlines was overextending myself in the airline industry, and I wanted to diversify. So I decided to keep American Airlines and I sold Delta. My next stock is CNK, and that is for Cinemark movie theaters. Now, Cinemark makes up 12% of my entire investment portfolio. It is valued at $1,617, and as I sit here today, it has made a 61% ROI. The average purchase price of my Cinemark shares was $10.26, and as I sit here today, the share price is at $16.50. Now, with many of my investments over the last couple of months, the thought process with Cinemark is the exact same as my others. With quarantine and with people having to stay home and movie theaters being one of the first things to shut down during COVID-19, the stock price absolutely plummeted. But the fact of the matter is that whenever the world returns to normal and whenever there is a vaccine for COVID-19, movie theaters will open back up, back to 100% capacity, and people will get back into the swing of seeing films. And when that happens, companies like Cinemark and their share price will reflect that increase in demand. So I plan on holding Cinemark as long as it takes for movie theater demand and movie theater customers to return to normal. And once that happens, I am confident that I can get a 3 times ROI on that investment. My next company is my most recent investment, and I actually just purchased these shares last week, and that is for the Norwegian Cruise Line Holdings, NCLH. And NCLH makes up 11% of my entire portfolio. It is currently valued at $1,580.79. And as I sit here today, I have made a 6% ROI on that investment. Whenever I purchased NCLH, the average stock price that I purchased it at was $17.16. And as I sit here today, it is valued at $18.17. So the reason why I invested in NCLH was I was looking for a cruise line to invest in, and I was going to invest in Carnival, but I did not feel really that confident in Carnival's ability to give me a 300% ROI over the long-term run. And because of that, I ended up going with NCLH instead. I like NCLH. I think that it is currently extremely undervalued, and I think that once things return to normal and once travel resumes, cruise lines will absolutely resume with those. In fact, in the last couple of months, there has been a record increase in bookings for cruise line vacations in 2021. And so in my opinion, once we hit 2021 and hopefully there's a vaccine for COVID-19 by then, cruise lines will see a dramatic increase in sales, and with that, the stock price will increase as well. Now, my next investment is an ETF as well, and this is an ETF for small cap companies. And for those of you who don't know, a small cap company is basically a company with a market capitalization of generally between $300 million and $2 billion, meaning that all of the share prices combined value between $300 million and $2 billion. And this is considered smaller in comparison to larger companies like Google or Tesla, for example. So this ETF is called TNA, and TNA makes up 5% of my entire portfolio. It is currently valued at $685.40, and it currently has a ROI of 31%. Now, I bought TNA at an average share price of $22.75. And as I sit here today, it is valued at $29.80. Now, the reason why I chose TNA was, one, because of diversification. I like the idea of investing in another ETF rather than in an individual company, and also because, like many other companies like airlines and travel industries and auto manufacturers, small cap companies were not immune to the effects of COVID-19. And with that, they will also be able to benefit from the growth that comes with COVID-19 recovery. And with that, we saw a huge drop in share price whenever COVID-19 hit, and we will most likely see a huge increase over the next couple of years whenever we begin and finish the recovery efforts from COVID-19. Now, my next stock is also an index fund, and the ticker symbol is FAS, and FAS makes up 5% of my entire investment portfolio. It is currently valued at $651.09, and as I sit here today, it has given me a 32% ROI. Whenever I purchased FAS, I purchased it at an average purchase price of $29 per share, and as I sit here today, it is valued at $38.30 per share. Now, the FAS is a subset of the Russell 1000 index, and it measures financial securities and the performance of those financial securities. The FAS saw a dramatic decrease whenever COVID-19 hit, and with that, I think it will see a dramatic recovery over the next 6 months to a year. Now, my last stock is a stock called DBI, and DBI is the ticker symbol for the company associated with DSW Shoes, which is a shoe retailer. Now, DBI makes up just 3% of my entire portfolio. It is valued at $287.86, and as I sit here today, it has given me a 14% ROI. Now, as I sit here right now, DBI is my smallest position, but it is a stock that I am wanting to add shares to. In the next couple of weeks, whenever it makes sense, I will probably be adding another $1,000 to $1,500 to this investment to bring it up to a total of between $1,500 and $1,700 total. Now, I chose DBI because I like DSW as a retailer, and I also think that shoe retailers are one of the few retailers that aren't immune to the online marketplace, but they are more immune to it. The reason is because it's easy to shop online for clothes or for various goods, but it's very difficult to shop online for shoes because depending on how the shoe fits, it will dictate the size of the shoe, and people like to wear their shoe to see if it's comfortable before they purchase them. Because of that, I think that retailers like DSW will always exist in a brick and mortar space to some degree. In addition to that, DSW has been heavily advertising since COVID-19 hit, and their numbers pre-COVID were very, very consistent, and their stock price at the point that I bought it at versus their share price at pre-COVID numbers, there is room for a 300% ROI over the course of the next 6 months to a year. So you guys, that is my entire investment portfolio, and the entire portfolio is valued at $14,297.14. Now, I know that my investment strategy is not perfect, and there's probably going to be a lot of people in the comments either critiquing or saying that it is a wrong strategy to follow. But for me and for what I'm wanting to accomplish from these investments, it is a strategy that works, and it has been working over the last few months. Choosing companies that had a historically high and stable share price that then crashed because of COVID-19, and the thought process being that they will recover over the next year or two. But remember, do not invest with money that you can't afford to lose, and understand that there is an inherent risk with investing in the stock market, especially during an economic crash like what we are seeing today. But with that being said, you guys, I would love to hear from you guys and what your stock picks are, what you've been investing in over the last few months. If it's not in the stock market, then what are you investing in? Make sure to leave your feedback in the comment below, and I will try my best to respond to every comment that I get. And while you're at it, make sure to also hit that like button, hit that subscribe button, hit that notification bell, and I will see you guys in the next video.